Next in line is a chart of HOVS, and we have a 100-day simple moving average plotted on it. This white colored line is 100-day simple moving average. MA close 100, which means it's a moving 100-day average of close, plotted as a continuous line. And you can see how prices have found support at its 100-day moving average and went ahead to make a new high. Following is a chart of Industrial Bank, and you can see a lot of colorful lines plotted on this chart. These lines are many different moving averages. We'll go ahead one by one. Gray colored dotted line, which is moving very close with price bars, is 20-day moving average, and you can see it is much more flexible as compared to any other lines plotted on the chart. It is flexible and it reacts more to a price change because it is a 20 EMA, 20-day exponential moving average of close. Alright, hence it is more flexible as it is taking an average of lesser data. The green colored line is 50-day EMA, exponential moving average. It is not as much flexible as 20 EMA. Still, it is much more flexible as compared to this white dotted line. This white dotted line is 100-day simple moving average. Take a look here. This white dotted line is 100-day simple moving average. And you can see since it covers a larger set of data to calculate its value, it is not as flexible as any other moving average. It's not as flexible as 20 or 50-day moving average. Nonetheless, it is much more flexible and closer to price data as compared to a 200-day moving average. A 200-day moving average takes close prices of past 200 days to calculate its value, and then it plots itself on the chart. Hence, it is much slow and much more rigid as compared to any other moving average. Now I've plotted all these moving average to give you a live example of how prices react when they reach levels of any of these moving averages. We'll start from November 2013, and these colorful circles are there to tell you which moving average acted as support or resistance. Pink colored circles suggest that prices found resistance at 200 moving average. White colored circles will suggest that they found support or resistance at 20 EMA. Green color will suggest that prices found support or resistance at their 50 EMA. And this white color shows that prices found support at their 100 simple moving average or MA. Starting from November, you can see prices surged above its 200-day moving average but failed to sustain itself, came down, surged above again, failed, came down, found minor resistance, drifted down, tried to break out again, failed, broke below, went lower, and then it went sideways for the month of Feb. Finally, in March, it broke above its 200-day simple moving average, surged higher, reacted, came down, found support at 20 EMA but could not make a new high, came down, found support at 50 EMA, made a new high, drifted down or started retracing lower, respected the level of 20 EMA, reacted positively, broke down but found support at 50 and changed its direction, came down, On support at 50 again, changed its direction, went sideways, broke below 50 but found support at 100, went up, reacted for a couple of days to find support at 20 EMA, made a new high, started retracing back again, and yet again it found support at 50 and then resumed its upward direction until it retraced back to find support at level of 20 EMA. Thus, moving averages provide you dynamic support and resistance levels. Thus, moving averages help you identify true support and true resistance levels. For example, if you were to follow 50-day moving average, you can see how 50-day moving averages kept on giving you correct support zones or places where you could have revised your stop losses. Hence, it is very important to make moving averages a part of your technical analysis tools along with charts and volume identification.